Hello, everyone. My name is Ari. I am a research analyst at Economics Design, and today we're going to be talking with Kiefer about Ponzinomics. So, Kiefer, why don't you start us off with telling us a little bit about how Ponzinomics works?
Hey, sure. So Ponzinomics is essentially a trait in projects where the primary motivation for a lot of participants to enter is really financial gain, not so much caring about whatever the underlying product, activity, or game is, but just really that drive to make money off the project. And in doing so, and having that extrinsic financial motivation be the main driver, then it means that the value added into the game is driven by all these users coming in. So you end up with this zero or negative sum economy where if someone's making money, it's coming because somebody else is buying in rather than there being any real value generated by the project. And also, I do want to say that it's not necessarily a situation as in a classic Ponzi scheme where people are defrauded or don't necessarily know the situation. So there are cases where not everyone is aware that this is how this cycle works. But in a lot of cases, it is at least somewhat apparent that a lot of this value is added is just being driven by this speculative other people buying in. So it's not always this clear deception.
Yeah, I think a great point in saying that perhaps the perception of Ponzinomics within blockchain games has changed over time because, I'm looking through LinkedIn and through Twitter, and then now as opposed to 6 months ago, I'm seeing lots of jokes and comments about the new something and earn. So I think that, definitely at the beginning, there was a lot of perhaps hype and new information coming through, and there was not really a conversation about the economics at hand. And now it's perhaps we've changed from no economics to like entirely focusing on the economics. And that's how kind of a better conversation about Ponzinomics and Ponzi schemes have become more mainstream. So, Kiefer, why don't you just tell us a little bit about which games have suffered the most from these Ponzinomics and kind of how that was exemplified through those games?
Yeah, so probably the biggest examples of this, Axie Infinity, and there are other games that have essentially just copied that model, like Pegaxi or Steppen took the core activity in a different direction, but used the same essential token model. But they had the system where people are very reliant on other users buying in order to continue to either purchase their NFTs or purchase the tokens that users are generating through gameplay, and it's really creating a reliance on continued growth in the game, and that's not a sustainable setup. You need to have a game where there's participants who are adding value that's not tethered to pure financial motivation. And so everyone was just breeding or playing and able to earn tokens without really good limitations in place to make this sustainable or real good value drivers.
I know from experience reading the white papers of these games is that there's a lack of really burning mechanisms for the NFTs. It's very hyperinflationary. There's really no way to limit the amount of NFTs. And typically if we use analytics platforms like Dune, and we take a look at NFT inflation, either in a game like Steppen or Pegaxi, we see this kind of exponential growth curve due to the lack of burning mechanisms. That's a really good kind of signal or indicator for people perhaps who are not familiar with blockchain games, who are interested in playing a blockchain game and owning an NFT, but don't want to get perhaps involved with those Ponzinomics, is by recognizing that element or that mechanic. So, Kiefer, in your experience reading white papers, as well as studying games and studying game economies, are there specific pieces of information included in the white paper that you think people should spend special attention to?
Yeah. And so here, I think one of the most important things to look at first, especially, is not even looking at some of the economics or sinks and burns, but really just starting at looking at the core experience. If there's a game, like what does the core gameplay look like? If it's like Steppen, like some exercise activity, if you strip away all the earning component, blockchain component, and just look at this core activity, think about, is this engaging? And I like to apply this kind of monetization test of if you're just ignoring blockchain completely, you have this core game, how would you monetize? If you think that you could be very successful in getting people to actually pay for assets in this game, for example, with microtransactions, then this could potentially be viable because there's fundamental demand for these assets out of pure enjoyment of the game. But if you think that people aren't actually going to buy these assets and you'd have to monetize, for example, through advertisements, then now if you apply the blockchain earning components to it, if you realize that no one is going to pay for these assets for just pure enjoyment, then now what you're left with is they're only going to pay for them now because they think they can earn something. And so that's kind of shows that there's only going to be this financial drive, which leads to this Ponzi-nomic cycle. So you got to make sure that people are going to actually be willing to pay for these underlying assets, which is going to be a real value injection into the ecosystem. And so, yeah, understanding that that there is a valuable core component underlying the economy, so that there actually is some potential for a positive sum ecosystem.
I think that's a great way to describe how value can be captured within a game, and what circumstances may value be captured, and which circumstances may value not be captured. So now that we've kind of laid out some of the fundamentals in terms of what are some iconic games, what are the mechanisms within games that represent Ponzi-nomics, I want to do a little bit more of an in-depth conversation, reviewing why Ponzi's or these Ponzi-nomics has dominated the blockchain gaming space. So do you want to start us off with some of your thoughts in terms of why this has happened over the course of the last year or two?
Yeah, so I have a hypothesis for this, and it's that there are a large subset of people who are attracted to the crypto space who just have extreme risk preferences. So obviously, you can place any trader somewhere on the spectrum of their level of demand for risk and reward. You got the very conservative people who are just looking for something safe. They'll go with bonds. And then you have people who are attracted to just the wild side of crypto, who want that really high risk reward. And I think even past a lot of maybe someone who just buys and holds strategy for Bitcoin, they want something where it just has an insane potential upside, but that comes with an insane amount of risk. And I see that this kind of group is there and demanding these kind of Ponzi-nomic setups where they don't have to just rely on there being real value add. They can get this insane potential return just based off of the fundamental Ponzi-nomics other people buying in. And I'd say this goes back farther than just this past year or two. I've been in the space for a while, and I can say that I've seen essentially Ponzi-nomic cycles happen and reoccur, just with essentially different themes or different wrappers on them, but just covering up the same potential Ponzi-nomics underside. Some examples of this were the hot potato NFT craze in 2018. Basically, the very early projects where people would just spin up a website, where this was before OpenSea even really got going, where if you buy this NFT and then it's immediately listed on the site for double the price, you're not involved with that at all. And so basically, you're just trying to be there first and not be the last one holding the bag there. And they started out with people with those maybe going for a week before they died out. And then it got to the point where you needed to be on the website in the first 2 or 3 minutes to have any chance of making money. And that was a craze that was big and that died out. In 2019, you had crypto casinos that had a token twist. So if you essentially mined the token by gambling, and then just holding or staking the token got you a cut of all future house profits. And then that got copied over and over. It just turned into people continuously playing on that site for literally the first day or two after launch, and then just sitting on the tokens waiting for future players to make it. And so there got to be so many of those casinos, the entire model essentially fell apart. 2020, you had all sorts of yield farming setups that were primarily driven by Ponzi-nomics again, of just users entering in. You had stuff like Yam Finance. And then, and as we've discussed, the 2021 crypto gaming. So these are all these just Ponzi-nomics in different wrappers, and that are fulfilling this fundamental demand from this very high risk segment of participants, that they're really just looking for this Ponzi-nomic setup and are waiting for some new version of it to come up.
That makes perfect sense. And I think like even more so to that point, the language I would like to use is get rich quick. I think there's a lot of get rich quick mentality within crypto, perhaps because that's a part of kind of human behavior. Perhaps it's because there's a lack of regulation around cryptocurrencies and therefore it might be able to, facilitate these Ponzi-nomics or pump and dump, as well as these rug pulls. So, I think an interesting distinguishing factor is that, blockchain gaming and the availability of NFTs within the game, for people who are not necessarily within the space, it's an interesting investment to make, right? If you don't have a game that is a Ponzi and, you have a team who's dedicated towards sustainability and whatnot, like there's a lot of potential and interest to the, to what blockchain technology as well as NFT technology can provide within the gaming space. And I think that because of this kind of get rich quick mentality, it's kind of taken away from the progress of blockchain gaming. And now we're kind of slowly starting to see an evolution towards building games that are in fact sustainable or attempt to be sustainable. And that's one of the things we do at Economics Design. And so I think that there's a lot of opportunity to come in terms of seeing these types of technologies being implemented in a successful way where it does not suffer from these kind of Ponzi dynamics. So I want to go into a kind of a new idea, which is a little bit about the semantics and the language used, because Ponzi is a word kind of to describe, trying to get in early and then selling off your bags before another person does kind of thing. But at the same time, what a Ponzi scheme is by definition is like making an investment, expecting a return on the investment, when in reality, your money is going towards fueling the return on the investment for someone earlier than you. So I think there would be an interesting point to be made, creating some new terminology around what is Ponzi-nomics, as well as just a better and like more inclusive definition to express what that means within blockchain gaming as like an industry as a whole. Do you have any thoughts on that?
Yeah, I do kind of feel like it covers it to some extent at the moment, Ponzi-nomics, and maybe just kind of expanding it out to just general scenarios of zero-sum ecosystems, so that there's no real value add, just looking at such as purely financially motivated participants. And so there are different kind of ways that the actual money is transferred between participants with these kind of different sort of token models. And so the actual mechanics of it vary a bit, but this overall Ponzi-nomics umbrella encapsulating zero or negative sum situations, I think makes sense.
Yeah, I would agree with that as well. So I wanted to bring forth a different idea. The idea that, like collectibles, for example, where the value of something is essentially what another person is willing to pay for it. So that can be, NFTs, for example, it could be a stamp collection. So an idea I had and I was kind of thinking about in recent months is how economically sustainable are the in-game NFTs if games ultimately typically don't have a long lifespan? Do you have any thoughts in terms of how we can fix this issue, or any insights involving tying in NFTs value to the game's longevity?
Yeah, that's a really interesting angle. And so in terms of like the fundamental value of these assets, like first you got to look at, is this kind of cosmetic focus or in-game utility focus? Because versus where you're looking at, is this like a hat or something in game that the value is derived from people's demand for essentially social status. They want to look good, show off. Maybe it's something rare that gives them kind of some status benefits, and really visual focus as being the underlying value there versus utility in gameplay, like a sword that does really high damage. But yeah, in both of these cases, the value is still tied to the longevity of that game. And this is something that people should definitely be aware of, because games do die out. They have varying lifespans. There's even if developers continue to make a lot of content for games, it's very difficult for games to potentially last forever. And so I think there shouldn't necessarily be that expectation that these assets will permanently have value. Although it was kind of making me think about kind of the benefits of interoperability in games. If there's a particular game, or I guess maybe some particularly rare assets from a game, if you bring in the concept of interoperability, you can kind of use those in new games to create some kind of benefit or status symbol. And in that way, some of these items could continue to have some value, some utility, even after the initial game starts significantly declining.
Yeah, I think very well said. I think that this is an underlying issue that perhaps needs to be brought to more attention to more people, and more importantly to, non-Web3 gamers who might be interested in buying NFTs, or, investment firms who are looking to purchase NFTs in hopes that they appreciate over time. And it's this type of issue which I think poses like one of the biggest threats to the long-term sustainability of games. And perhaps the argument here is not necessarily that, we need to create sustainable economies, but we're dealing with an issue that's not necessarily strictly defined by parameters that we can control, because it's not like we can necessarily control how successful a game can be or for how long it can be successful for. So these are always difficult things that I try to wrap my head around when I'm looking at designing game economies and whatnot. And so it's always something to keep important at the back of our heads when we're looking at the long-term longevity of these NFTs, as well as these games in their entirety.
Yeah, it's really important to set expectations around this and around kind of sustainability in general. Sustainability shouldn't be defined as these assets will have value forever, or there will be earning opportunities for everyone or for an unlimited amount of time. It's just kind of creating some more realistic expectations around what you're actually targeting in terms of value accrual or generation. And so as we improve those expectations, I think we'll get to the point where we're actually able to get closer to sustainability in a more reasonable time frame, a more reasonable target group.
I agree. And actually, that kind of leads into a different thought I had, which is what criteria must be met in order for these blockchain games to be adopted mainstream. As someone, for example, who plays a combination of both of these games, it's important, like for me, to be able to have some faith in the game, in its economics design, in the value of the NFTs in order for me to participate and play it, as well as invest my money into it. So what do you think are some criteria that must be met or could be met in order to have a more thorough onboarding of these non-crypto gamers?
So first off, it's abstracting away the technical difficulties in the on-ramping. So abstracting away the wallet creation process that users can have the more familiar like username, password style login, and just have the wallet creation aspect be handled for them. I think that's going to be a really big step to onboarding. And then tied to that as well, taking out any gas fees. And so abstracting that all away, they shouldn't have to understand they shouldn't even be aware that is happening. It needs to be as very close in experience to a Web2 game, but just there happens to be that these assets are tradable, or that these Web3 components are not necessarily at the forefront. I think a lot of the successful games down the line are not going to be really trumpeting that they're Web3 games. They're just going to be games, but just have these additional benefits that gamers kind of gradually realize as they test it out, and not necessarily shoving Web3 down the gamers' throats.
Yeah, I would agree with that. But interestingly, and perhaps like contrary to that, so STEPN, which has been tremendously successful with player onboarding, marketing and whatnot, it's actually been a game where we've seen an emphasis on the Web3 component of it, of the earning potential of, these NFTs, as opposed to kind of directing attention away from them. And we've seen a decentralized exchange developed within the app itself, perhaps arguably one of the best games or applications where it makes it extremely easy and simple to use NFTs and in-game currencies. But ultimately, I do agree that we have to transition away from these elements. But it is interesting that we have seen a lot of success actually quite recently, even when these perhaps NFTs and Web3 kind of terminology was at the forefront of the application. You have any thoughts on that?
Yeah, and I think it works in our current point in time in development of all these little components, and in the audience for NFTs is growing. There was obviously this big surge within the last year of people getting into the space and learning how to set up wallets, but it's still a really small portion of the total audience that you're looking to get. There are billions of gamers around the world, and there needs to be much wider accessibility and better technical implementations in order to actually reach this wider audience. So that was a good step in the direction of getting people familiar with Web3. But yeah, I do think we're going to need there needs to be this additional steps taken in order to expand out that net and bring in that bigger audience.
Great. And yeah, I do agree with that. Really emphasizing accessibility is what will dictate how quickly player onboarding occurs into the crypto gaming space and how quickly we can get away from these gas fees and all these obstacles that players face, whether they're economic, whether logistic, whatever they are, in order to really create a more substantive space for blockchain gaming within the realm of the entire gaming space. So that concludes our discussion for today. Kiefer, thanks for taking the time to discuss. For our listeners, if you are looking for more information, Lisa, our CEO, has written an excellent book with excellent information. It's called Economics of Math of Engineering and DeFi, and it goes over Ponzinomics as well as a plethora of other topics which are relevant to designing a sustainable token ecosystem. So thanks for listening.
Thanks, Ari.